Good morning, friends. Welcome to the daily morning podcast of SBI Securities. Today, we will cover a domestic market update, global market update, and trading and investment strategy for the day. Let us check what happened in the domestic market yesterday. So, yesterday was a day where market has settled at all-time high, led by banking, financial services, and energy stocks. So, we have seen Sensex advancing to the tune of 2% to settle at 68,865 levels, whereas Nifty was up to the tune of 419 points and ended at 20,687 level. The rally was led mainly by the banking stocks like ICICI Bank, Kotak Bank, HDFC Bank, and SBI, whereas other key gainers were Larsen and Toubro, IndusInd Bank, Ultratech Cement, Bajaj Finance, NTPC, and Mahindra. Adani stocks were also in green yesterday, so we have seen entire Adani pack rallying to the tune of 4 to 10%, led by the massive win of BJP in the state elections. In terms of advance to decline ratio, so yesterday the ratio was skewed in the favor of bulls. So nearly 2400 stocks have gained in the trade yesterday as compared to 1500 stocks which ended in red in the trade yesterday. However, yesterday we have seen there was a massive outperformance from large cap stocks as compared to the mid cap and small cap stocks. So Nifty mid cap 100 and small cap 100 was up to the tune of 1 and 1.2% respectively as compared to 2% gain on Sensex and Nifty. One of the interesting data point which I would like to share with you is the big delivery volumes. We have seen a massive delivery in HDFC Bank, almost to the tune of 3200 crore, which is 2.3 times the monthly average delivery volume. ICICI Bank has reported delivery volume to the tune of 2235 crore, almost 3x monthly average volume. SBI has reported delivery volume to the tune of 956 crore, almost 2 times monthly average delivery volume. And Axis Bank has reported 934 crore of delivery volume as compared to 1.7 times which is 1.7 times the monthly average volume. So massive delivery marking across the banking stock. And if you remember, private banking sector was a laggard since many months, and now this sector has started to pick up big time. And going forward, what we believe is that this rally in the banking stock may continue, led by the massive inflow from foreign institutional investor and domestic institutional investor. In terms of fund flow, we have seen FII buying approximately to the tune of 2000 crore in the equity market yesterday, and DII were buyer to the tune of approximately 4000 crore in terms of buying in the equity market yesterday. Let us move on to the key development in the Indian market. So first of all, on my radar is Indian Energy Exchange. IEX has reported that the November volume was at 9,136 million unit, which was up 17.5% year over year. Total electricity volume for the month of November was at 8,371 million unit, which was up by 13% year over year. So we may see positive reaction in IEX stock today. Moil Manganese Ore India Limited has reported a jump in production to the tune of 35% year over year to 1.62 lakh metric ton in the month of November. So Moil will be reacting positively to this development today. The call is open from our end in pick of the day, and one can participate in the stock through during the day. Gulshan Polyols, the company has received an order worth 572 crore to supply ethanol to oil marketing companies for the next calendar year. The company will supply 89,404 kiloliters of ethanol to BPCL, IOCL, and HPCL. So Gulshan Polyol will be reacting positively in the trade today. We have seen Brigade Enterprises, a Bangalore-based company, signed a joint development agreement to develop luxury residences of around 0.4 million square feet in Mysore with a gross development value of 300 crore. The stock may react positively in short to medium term. Mahindra and Mahindra Financial Services has reported overall disbursement at approximately 5800 crore for the month of November, which is up 16% year over year. This is in line with expectation, and the street is expecting a far better number from Mahindra and Mahindra Financial Services in the second half of FY24. So kind of neutral reaction we may see in Mahindra and Mahindra Financial Services. JSW Infrastructure, one of the second largest port company in India, has entered into share purchase agreement to acquire over 50% of PNP Maritime Services for 270 crore. That's a positive development in long term for JSW Infrastructure. Hindustan Construction, its Switzerland unit will divest. The company will divest its entire stake in Switzerland unit for 928 crore. That's a positive development as far as SCC is concerned. Coal India has projected that the total income for the company will be to the tune of 1.41 trillion rupees for FY24. So that's a positive development for Coal India. Moving on to the next news, that is SCL Tech. SCL Tech is in talk with the State Street Corporation to sell its entire 49% equity stake in joint venture for $170 million. That is approximately 1417 crore. So that's a marginally positive development as far as SCL Tech is concerned. Moving on to the block deal. So yesterday we have seen CAM's management promoter Wabak Pincus exiting the entire approximately 20% stake at 2766 rupees per share, and the buyers were marquee investors such as Morgan Stanley Asia Singapore, SocGen, and ADAI and Mahindra Mutual Fund. We like the business. It's an indirect play on the rising volumes on mutual fund industry, so one can accumulate this stock in medium to long term portfolio. Moving on to bulk deal, so we have seen selling to the tune of 2.5% from Nirmal Jain and family in 361 Wealth Asset Management, and approximately 1% stake out of that was picked by ICICI Prudential Value Discovery Fund at 600 rupees per share. So this stock can be on radar. Bharat Wire Rope, we have seen Autumn Investment and Infrastructure buying 3.5 lakh share at rupees 296 per share price. Again, this stock can be on radar. So we have seen buying in MTNL and Paisalo Digital from the few marquee investors. At the same time, in Zomato, we have seen Alipay Singapore Holdings selling 26 lakh share at rupees 112 per piece. In terms of insider trading, Thomas Cook, we have seen promoter Fairbrick Capital has offloaded 4 crore shares between 30th November and 1st of December. This was through offer for sale route. Bajaj Electrical, we have seen hand change between promoters. Jindal Stainless Steel, we have seen promoter buying from open market approximately 15,000 share, and in Star Cement, the continuous selling from the one of the promoter group family, Rajendra Udyog HUF, has sold 28,000 share between 28th November and 29th November. So that's all in terms of news. If I have to sum up today's discussion, today overall global setup looks to be a neutral with a positive bias. On the domestic market front, Singapore Nifty, GIFT Nifty is indicating a flat opening. However, what we believe is that stock specific action may continue, and the sectors which were exhibiting positive momentum yesterday will continue to show positivity over the next few days. So few sectors which comes on my radar are banking and financial services. So entire private banking as well as public sector banking will be under focus. Oil marketing companies HPCL, BPCL, IOC, due to the lower crude oil prices and with the expectation that government may not reduce the retail fuel prices, so that stock will continue to remain under pressure, under focus. So all these stocks have lot of steam still left in this. All these stock we may see 30 to 40% rally in oil marketing companies over the next few months, subject to crude oil prices remaining below $85 per barrel. In addition to that, cement is the one sector which we like. So within cement, we have seen Ultratech Cement making a new life high yesterday, and at the same time, all the other mid-sized cement companies such as Star Cement, or for that matter, Udaipur Cement, JK Lakshmi Cement, JK Cement, Ramco Cement, Birla Corp can be on our radar. Infrastructure, which is again driven by the government capex, companies like Nagarjuna Construction, Vatek Wabak can be on radar. At the same time, entire public sector, non-banking sectors like railways and defense will continue to see a order inflow over the next 3 to 6 months, and those stocks can also be on radar. So that's all for the day. Thank you for patiently listening to the podcast. Have a good day.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.